Good morning, everyone. November the 23rd, 2015. Time to kick off another trading week. And I think the big news today is the strength of the dollar. The Japanese Nikkei was up a little bit, but the dollar is being blamed for the rout in the commodity markets. Crude oil, gold, copper, you name it. And if you go look at the CRB index and the rest of it, there's your strong commodity, and I think it's up with some currencies almost 20% over the course of the year. So that's a lot. We do have some news today. The big news out of Europe were flash service and manufacturing PMIs. The only one that was below forecast was France's service PMI. Germany and the EU's manufacturing and service PMIs were well above forecast, so they got to be smiling over there. The lower euro is bringing in more imports. The cost of goods do go up, but that's okay for now. So we've got a holiday week starting noon on Wednesday. People that can get out of the office will get out of the office. Wednesday, I think, is Wednesday is the biggest travel day in the United States. And so those that can leave will leave. So Wednesday noon on, things will get pretty quiet. The markets are closed on Thursday. Friday's action will be limited. Markets close at 12:15 Central Time. And some people will position over the weekend. And I don't even know how you play Black Friday, seeing how Black Friday started 2 weekends ago. So if Black Friday's even in play this time. So we have some news today that will impact the trading. Chicago National Activity Index, don't know what it's going to be. Last month it was 0.37, a positive number. PMI manufacturing for the US 54.5. Anything above 50 shows growth, and existing home sales 5.55 million. And you can't buy a new house without selling your old one. So most contracts in the United States are written contingent upon selling the old house. So the news focus today will be PMI manufacturing and existing home sales. Right now, futures are pointed lower. Tomorrow's the 2-year auction. Wednesday's the 5 and 7-year auction. We do see markets sell on the 2 and 3-year auction now, only to snap back on the last one. So it's hard to say what we have right now. I don't think the market can dump today because of tomorrow's 2-year auction. But if the E-mini rallies, we'll probably see some selling in the 10 and 30 year. So we are pointed lower, maybe a little bit lower. First buy 5 to 9, and then 29 to 01 for buy 2. We're going to put a question mark at 13. There is some reasonable support at 10 to 13, and that's where we find ourselves right now with a low of 12. On the sell side, 19 to 23 with a question right here is 15. You can see right here with that low and that high, so this 15 to 17 area could be resistance. In fact, let's make it 15 to 19. The idea that we'll sell early, then 23 to 27. Just had one of those moments where I'm thinking something, and all of a sudden you have that little squeeze in the middle that maybe you need to rethink that sales point, Charlie. And we need to learn to honor those little feelings, that little wave or that little surge that we get when we say something, and subconsciously something comes out that may not be right. So we are pointed lower. I think we can trade a little bit lower, but again, I don't think the market breaks. Looking at the 30-year. $54.06, last rotate up, W period was 02. I've got a V at 03, so 3 to 7, sell 1, and then we'll make it 13 to 17, sell 2, 21.25, buy 1, 9 to 13, buy 2. Hard to see the stock market taking off and rallying, but if the stock market does run, we don't. We'll have to sell lower. If the stock market sells off the opening, we're going to have to pay up to get in. We've probably seen the lows, so that's where we are. And it is Monday morning where a lot of people kind of come in and scratch their head, and it is a holiday week. So we've got a few extra things to play with or consider. Gold got hammered, copper got hammered, crude oil got hammered, all being blamed on the strong dollar. So we find ourselves in our 65, 67 area. And again, I think most people view weakness in gold as an opportunity to buy. Can't be too many people pleased with what's going on internationally and in some places domestically, including the United States. I'm always amazed at the interest in gold by everybody, and it's blue collar. It's half of the United States wages, half of the people in the United States earn $36,000 or less, and that segment of the society talks about gold and silver too, and that's pretty unusual that people, just across the board, are very, very interested in having a little gold, a little silver, just in case. As are China and Russia, that buy gold. Some people think that China and Russia are going to take the world back to the gold standard. Be nice if something like that happened. Take it out of the monetary supply from the printing press to the vaults, but doubt if it happens anytime soon. Okay, some of the comments on the weakness in the euro are based on how inflation has returned across the board, all across Europe. And generally it takes about 6 months after you've really devalued your currency for you to use up your current stock of materials and have to start paying up for everything else. And that's where Europe finds themselves today. So stops below 106. So 106 even is buy 1. Buy 2 will be in the 105.75 area. On the sell side, 40 to 50, sell 1. Then 75 plus or minus, sell 2. Crude's getting hammered. Talked to my couple of buddies down in Houston that are pretty close to the oil industry, and they're pretty firmly convinced that crude oil has to go to 20 to shake out the over-leveraged companies out there, the companies that came along for the fracking, get all the assets into the hands of strong players, and start the game all over again. And this would be countered by what's going on in the Middle East and how wide does it spread. The Arab Spring has brought gunfire and explosions from Mali all the way through Syria, Libya, North Africa, Tunisia, Algeria, and Pakistan, where they've never really stopped shooting at each other. So this 42 to 42.50 has been resistance, and it's held up pretty well for us. So sell 1, and then 42.75, 43, sell 2. On the downside, we got a pretty clean break here in the 41.35, so 41.25, 41.50 buy 1, and then 40.50, 40.75. We've got a lot of range right here, 42.80 to 40.45. That's about 140 ticks. So 140, 150 ticks, give or take a few, is kind of how this market likes to trade. And once again, if you in London, the London low was 40.50. You all have just fabulous opportunities. And then you can see the run that started in V period right now, so there might be a news headline or something out there that has kicked this off. That would be my guess, because this explosion from 40.50 up to 42.75 just took place. I'll have to look and see if we have any news that's driving it. There is an oil glut. People wonder where we're going to be able to store all the current production that keeps coming. And that's hanging over the market too. That makes the selling a little bit worse. And to the E-mini. The tendency in E-minis is to rally into Thanksgiving and close up on Wednesday afternoon and close even higher on Friday. So those are seasonals, and we are pointed up right now. If it were to sell, sell it on Monday, sell it on Tuesday, then rally it back on Wednesday. So we have a chance if, again, if we fail to get through this 90.95 area for the market to sell. So sell 1's 90.95, then stops above 2100. 21.03 would be sell 2. On the buy side, we've got our 80 to 85 area. Right here, 84 is the bottom of value, 82. So maybe stops below the value area. So we'll put 80, 84 buy 1. And then we'll make 70, 75 buy 2. Atlanta business Chicago Fed business activity index. Don't know what the forecast is. Didn't see it anywhere, but last month was 3.7, a positive number if it's over 0. Business conditions are such that the economy can grow. PMI manufacturing at 54.5, which would show economic growth in existing home sales at 5.55 million. And the existing home sales number could come in lower than forecast if the recent trend holds. PMI should come in lower than forecast, but you don't know. That's not a very it's just a tough number to read. Now, like ISM manufacturing service, where they cook the books and you know that they're going to make it look as good as they possibly can. Okay, it's going to take a bit to get everything up, printed in the right slots. I will be back with you as soon as possible.